Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're diving into a revealing survey from Mortgage Professionals Canada, which highlights a significant portion of Canadian mortgage holders feeling anxious about their upcoming renewals. According to the survey, 7 in 10 mortgage holders, or 69%, express anxiety as they approach the renewal process. While this figure might seem high, it's actually a 7 percentage point improvement from last year's numbers, indicating a slight easing of stress among mortgage holders. The survey also sheds light on the broader context of mortgage renewals in Canada. Nearly a third of Canadians are expected to renew their mortgage in the coming year, and over 3/4 will face renewal within the next 3 years. To cope with anticipated increases in mortgage payments, many have already begun adjusting their financial habits. 61% of borrowers report cutting back on spending, while others are considering more significant lifestyle changes. Some respondents are even taking on additional work or changing jobs to manage their mortgage obligations, with 17% indicating such plans. Additionally, a portion of homeowners are exploring ways to offset their mortgage costs by renting out a room or even contemplating selling their home. Interestingly, 10% of those surveyed have already rented out a room, and another 10% are thinking about selling their property to manage payments. Despite the challenges, there's a silver lining. The survey reveals a shift in consumer sentiment, with more Canadians now believing it's a good time to buy a home. 42% of respondents feel optimistic about purchasing a home in their community, which is an 11-point improvement from last year. This positive shift may indicate a gradual recovery in consumer confidence, even amid ongoing financial anxieties. The survey also provides insights into the types of mortgages Canadians hold. In 2024, 75% of mortgage holders had fixed-rate mortgages, marking an increase from the previous year. Meanwhile, 20% of mortgages are variable or adjustable rates, reflecting a slight decrease. This trend suggests a preference for fixed-rate stability in uncertain economic times. As we continue to monitor these trends, it's crucial for mortgage holders and potential buyers to stay informed and consider their options carefully. The landscape is constantly evolving, and understanding the current climate can help make the renewal process less daunting and more manageable. Let's turn our attention to a recent report from Royal Bank of Canada Economics, which provides some insights into the current state of home affordability in Canada. According to the report, there have been some positive developments, as homeownership costs have eased for 3 consecutive quarters. This is certainly a step in the right direction, but it's important to note that homeownership costs as a percentage of median household income remain close to their worst ever levels. Specifically, in the third quarter of 2024, these costs were at 58.4%. The report highlights that in the previous year, the share of income a median Canadian household needed to cover mortgage payments, property taxes, and utilities reached an all-time high of 63.8% in the fourth quarter of 2023. This indicates that while there has been some improvement, affordability continues to be a significant challenge for many Canadians. Interestingly, the report notes that certain markets in Canada have experienced notable gains in home affordability. Vancouver, Victoria, and Toronto are among the cities that have seen the most significant improvements when compared to other markets across the country. This suggests that while the national picture shows some challenges, there are pockets where the situation is getting better. Looking ahead, Royal Bank of Canada Economics expects further relief in 2025. This anticipated improvement is attributed to potential rate cuts by the Bank of Canada, as well as growing household incomes. These factors could provide much-needed relief for Canadian homeowners and those looking to enter the market. It's crucial for us to keep an eye on these developments and understand how they might impact our financial decisions. The evolving economic landscape means that while there are challenges, there are also opportunities for those who are informed and prepared. The Financial Consumer Agency of Canada has reported significant savings for Canadians under its Mortgage Relief Guideline, which was implemented to assist those at risk of mortgage default due to financial stress. From July 5, 2023 to June 30, 2024, the guideline helped Canadians save over $4 million in prepayment penalties for lump sum payments, aimed at avoiding negative amortization. In addition to the savings on prepayment penalties, the guideline also helped Canadians save more than $200,000 in waived fees and costs. This initiative was targeted at those facing exceptional circumstances, such as increased payments in variable rate mortgages or negative amortization, which occurs when mortgage payments are not sufficient to cover the interest, leading to an increase in the loan balance. Frank Lofranco, the Deputy Commissioner of Supervision and Enforcement with the Financial Consumer Agency of Canada, expressed satisfaction with the results, stating that the relief measures are effectively supporting mortgage holders under financial stress. He pointed out that the agency's expectations are being met, as evidenced by the substantial amount of penalties and fees waived. The guideline issued in June 2023 required federally regulated financial institutions to waive prepayment penalties and some interest charges and internal fees for clients at risk of default. All such institutions implemented the guideline, reflecting a coordinated effort to mitigate financial strain on mortgage holders. Interestingly, the number of at-risk accounts has been on the rise, with figures increasing for 4 consecutive quarters. Specifically, the number grew from 29,557 at the end of the third quarter of 2023 to 35,556 by the end of the second quarter of 2024. This rise is primarily seen among holders of fixed-rate mortgages, although variable rate mortgages with variable payments still have the highest proportion of at-risk accounts. A notable development is the decrease in the proportion of variable rate mortgages with fixed payments entering negative amortization. In September 2023, over 31% were in negative amortization, but by June 2024, this figure had fallen to 18%. The reduction is attributed to mortgage holders adjusting payment amounts or making lump sum payments. Financial institutions have proactively reached out to more than 47,000 account holders, offering relief measures where necessary. By June 30, 2024, over 8,000 relief measures were implemented for principal residence mortgage accounts deemed at risk. However, more than 5,000 mortgage holders refused relief, possibly due to access to other funds or financial help from family and friends. The Financial Consumer Agency of Canada plans to continue monitoring the implementation of the Mortgage Relief Guideline to ensure it remains effective in assisting those in need. This ongoing oversight will help maintain the stability of the mortgage market and provide support to Canadians facing financial difficulties. Let's dive into some intriguing predictions for the Canadian mortgage and housing market in 2025, as shared by Penelope Graham, a mortgage expert at ratehub.ca. Despite the high housing costs and mortgage interest rates that have put a damper on many Canadians' dreams of homeownership, there are signs of change on the horizon. The Bank of Canada has been reducing its key interest rate significantly over the past year, and more cuts are anticipated. This move, coupled with new government measures, aims to make home affordability more attainable. A noteworthy change is the increase in the price cap for insured mortgages, which has been raised from $1 million to $1.5 million. This adjustment, the first since 2012, is designed to help more Canadians qualify for a mortgage with a down payment below 20%. In addition, the government has expanded eligibility for 30-year amortizations, specifically targeting first-time homebuyers and Canadians purchasing new builds. The recent removal of stress tests on insured mortgage switches is another step towards improving affordability. Looking ahead to 2025, Penelope Graham cautions that borrowers should remain vigilant as the year could bring economic unpredictability. With the potential implications of a second Trump presidential term and possible trade tensions, uncertainty looms large. Nonetheless, Graham identifies several trends that could shape the mortgage landscape in Canada. One of these trends is a resurgence in demand for variable rate mortgages, fueled by anticipated rate cuts from the Bank of Canada. Graham predicts that another 50 to 75 basis point reduction could occur in the next 6 months, potentially bringing variable mortgage rates to the mid to upper 3% range. Meanwhile, fixed mortgage rates appear to be reaching a floor as bond investors remain cautious amid economic uncertainties. This situation might lead borrowers to favor shorter-term fixed-rate options, such as 2- and 3-year terms, which offer protection from short-term volatility and greater flexibility. The coming year could also see a competitive landscape among lenders, as approximately 1.2 million fixed-rate mortgage holders are up for renewal. With relaxed stress test requirements, borrowers may find it easier to switch lenders if they find a better deal. Graham anticipates that lenders will aggressively compete for both new and renewing borrowers with competitive rate pricing. Graham also notes an upswing in home buying activity, spurred by rate cuts and favorable borrowing conditions. This increased demand could continue throughout the first half of 2025, driven by improved affordability and new mortgage policies. Importantly, lower mortgage rates are expected to mitigate the potential payment shock for borrowers renewing their mortgages this year, especially those who secured low rates during the early pandemic years. This environment could lead to some of the most borrower-friendly conditions seen in recent times. As we look to the future, it's essential to stay informed and explore all available options, particularly if your current lender is not offering competitive pricing. The evolving market dynamics present opportunities for Canadians to secure favorable mortgage terms and conditions. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.